to the 92nd edition of our Trading Opportunities webinar. This is Nero. Let me just check the microphones at my end before I begin with the actual broadcast. Mic test, mic test. Hello, hello. What is going on here? While I check things at my end, if you guys are able to hear me. Hello, hello, hello. Yes, it is working at my end. So, guys, officially welcome to the 92nd edition of the Trading Opportunities webinar. My name is Nirav, and let me just quickly finish with the setup here. I have a short position on gold, which is we'll discuss it in the webinar when we come to it. So, anyways, let's begin with the disclaimer as always. So before we begin with the actual discussion, here's a disclaimer that basically telling that all content presented here is for educational purposes and not soliciting buy or sell. If you go on to use the views presented here for your trading or investing, you yourselves will be liable for your profit, your loss, or loss of profit. With that being said, you can read the rest of the disclaimer by pausing the stream at this point in time. Now, moving ahead with the webinar, I'll give you a very, very quick introduction here, guys. Let me just load up a few things here. So guys, my name is Nirav and I'm the admin and owner of the website 50 Eyes Market Analysis, where I have been discussing about the markets for last 8 years and been doing this with a consistent track record. So now that I brought up the track record, here is the track record which I'm mentioning. So for all these years, whatever webinars or content I've produced in videos or webinars format, I have kept a record of what I said and how it performed. And since 2016, as you can see, I have an accuracy of 80% plus, 87.5, 2017, 84.68 to 18, 84.88, 19, 2020, 88.5 to 2021, 82.22. And currently, we are doing a series of webinars called Trading Opportunities webinar, and we are in the 92nd iteration of it. In the past 91 webinars, and yes, guys, I was checking what we discussed in the 91st webinar, which was last week on 1st December. And no surprises here. I was able to see the market movements on all six of the things we discussed: crude, gold, S&P 500, Nifty 50, Bitcoin, and Euro USD. All the six setups we discussed all have played out. So we will look at that as well while we go in the webinar. So combining that with all the other webinars that we have gone through so far, we have now 181 trades which have worked out, which were discussed in these 91 webinars. 181 trades in 91 webinars. So keep in mind, guys, for you who are new here, that we go live every Friday at 7:30 p.m. IST. And 2 p.m. GMT. So just convert it to whatever time zone you are in, right? So this is the time we go live every Friday. So with that all being said, now let's head over to the main thing, which is our discussion. Let me see. Yes, a few more things. Lastly, you can also check my video courses on my website and my book on Amazon's Kindle platform. Here's the title thing with the markets, and it's available on Kindle for instant access. And this is the way we proceed with the webinar. We'll first discuss the chart of Euro USD, followed by crude oil, gold, S&P, Nifty, Bitcoin, and some trades here and there, and maybe some other discussion as time goes by. Right. So that was the main thing. Lastly, if you are finding the content of use, there is definitely a need to have more views on these videos. I put a lot of effort. Many hours of analysis goes into getting out this discussion and detailed analysis. So while I'm sharing it, I would appreciate and would request you to share the content. Once it's complete, you can share the YouTube video link in the live section. You will find the link by heading over to our website, YouTube channel 50 Eyes Market Analysis, or at the rate of 50 Eyes handle. In the live section, you will find the link, or you can just go to the website, and here will be a 90-second webinar link available here. Just like all these other webinars, link are available, and this will lead up to a page with the timestamps, etc. So you can have a better view at the webinar. With all that being said, let's now head over to our first discussion, which will be the chart of Euro USD. Let me remove this. And so I have been short on gold, as I said. I'm monitoring it on the other monitor I have, like I have 4 here. So one of them is being used to currently monitor the live trade. So I might shift on it because I might have to switch to it before heading towards it. So euro, right? So first of all, let's quickly have a look at what we discussed about euro USD in our last meeting, because that is how we proceed in these webinars. We always go to the discussion of the last meeting and then see what was discussed in the webinar and what happened now. So let's quickly check euro USD around the time it was discussed and see how it proceeded. Just return on the 1080p quality and it's already muted. So here's a chart of euro. Somewhere here we are having a discussion on it. Let me just see. Okay, so this rough outlook, as you can see, this is a recording from the last webinar. Our main idea on euro USD in the last discussion was that this market is 1 second. Yes, so as I was saying, our last discussion, the main idea was that this market is currently heading down for a wave C of a flat correction. And in the wave C of the flat, we had one leg down remaining. And as you can see over here, where I'm pointing with the mouse, the downside target was 1.08517. So this was the minimum expected downside move, which we were thinking of on euro at that point in time. Now let's head back. Keep in mind the discussion was last done on 1st of December and the price was around that time at 08652. So as you can see, that downside target was obviously hit and exceeded by a lot, big margin, right? Now that brings us to the analysis. So first of all, the last analysis we discussed the downside target, it is hit and downside target has been achieved. However, we were also considering the fact that maybe after the downside target is hit, we will be seeing a reversal, which has not happened. So that brings us to the current discussion. Let me just revise what the count was. POR was here. 1 second. So this was our point of reference or the starting point for our last analysis. Right from this point, we had expected an A down, a B up, and then a C down. Right now, the expectancy was that the C will complete somewhere here or maybe a little bit lower, but it has gone on for way too long. So in Elliott Wave terminologies, when this thing happens, when the wave C goes much lower than the wave A, in this case, basically this is the wave A, this is the wave B, and this leg down is C. So as I said, we were expecting it to end somewhere here or maybe even here, but it has gone way too longer than expected. This is what we will call an expanded structure in Elliott Wave terminologies. And now that it has gone on and done that, the likely chances of this structure becoming a something else and not being a flat are quite high at this point because this C is way too extended, right? So first of all, let me discuss the obvious count which we have at this point in time. So the obvious count is that this is the wave C down, and the wave C can be counted as expanded diagonal, can be counted in a few other manners as well, but I'm not really interested in that. What I'm really interested in noticing is that if this is not the C of a flat, then the other possibility comes out to be that this was actually a wave 3, and this is not the continuation of 4 here, but actually the 4 is already complete. If the 4 is already complete, we have the 5th already complete, and if the 5th is already complete, then this now becomes the start of a new leg down, and then it can be counted in multiple different manners. As I said, not really this. Hmm, maybe that was the main count. So, anyways, you get the idea. Then it can be counted as a first leg down, second up, or even a nested pattern with multiple ones and twos so far in the downward stream of movement. So, with that being said, the main idea now becomes not really clear. Basically, we don't have a main idea at this point. As I said, one idea is that this is C, well and good, and the market has completed a wave 4 here, or is about to complete a wave 4 here. And as soon as this wave 4 circle degree is complete, we'll see an upward movement, right? That's our main idea. or first idea, or the one which we discussed last time, right? Now the new idea which I just discussed is basically that the 4 was already complete here, 5th is already done here, and this software is really lagging. 4 is already complete here, 5th is already complete here, and that brings us to the new idea where it will just keep going down. So what is the strategy in a situation like this, where one count is suggesting downward movement, another count is suggesting upward movement? Is basically nothing but to wait and watch, right? What I'm gonna do here is I'm just gonna observe for some extremities. What I like to do is place an alert to the downside around 1.068, and below it I'll be interested in or looking for shorts. As far as longs are considered, I already have a trend line placed here, and what I'll do is I'll also create an alert for the upside here. So these are not concrete trading ideas at this point. Euro USD, I am more interested in sitting outside and just observing this market. Right below these levels, I will look to plan something. Right, I will look to plan possible longs above 1.085 and possible shorts below 1.0688ish level. But nothing going on right now, so I don't want to put any more time in this. And with that being said, hey, we have Sushil in the chat. Hello, Sushil. So, guys, if you are also live in the YouTube or LinkedIn stream, don't forget to say hi. Or if you have any doubts, you can also push them in the live stream. Yeah. So with Euro, we don't want to push any more time. Let me just quickly go over to gold, and it is falling like crazy. Initially, the minimum target I'm looking for is 2002 and then 1998. So, anyways, now heading back to our analysis on crude oil. So crude oil, what we have here is another analysis which played out picture perfectly. So before discussing the actual counts we have, because a lot has changed by the way since our last discussion on crude. So before going over all that stuff, I'll just like to quickly and check what we said in the last analysis on crude. So here it is, crude, and this is our last analysis. So as you can see, I was very clear about the fact that my bearish bias, I'm more biased towards the bearish side basically. And two counts were discussed. Basically, one count was discussed of flat correction, and two scenarios were discussed. One was that this is an A up, B down, and C up, as you can see already plotted in the recording. This is, by the way, the recording of the last webinar done on 1st of December. And we were expecting straight down movement from here. Second was that this B is still continuing, and then there will be a C up and then down, which was the less favorable scenario. So what happened over the period of time is that the count which you see on screen, which was discussed in the last webinar, did actually play out. Again, you can check all this stuff by going to our YouTube channel and clicking on the live section in the 91st webinar. You can just check it. It's all time stamped and everything is there. So now this has again played out, again a +1. And as I said, all 6 setups we discussed in the last webinar: gold, crude oil, Euro USD, and Nifty, S&P, and Bitcoin, all of them have played out. We'll see the rest of them as we go along. And if you are finding the content useful, if you have been following these webinars, make sure you spread the word. And we are doing it all for free, all in public eyes, and I've been doing it for many years, 8 years plus, right? So it will be nicer to have a little bit more views and likes and shares and whatnot. You can see the state of current number of views is it's extremely low from where it should be. So, anyways, getting back to our discussion, as I said, WTI crude oil, we expected downward movement. Downward movement has happened, and it has fallen down a lot. And I can just go to the crude oil Slack, and let me see if I have some stuff I can show off here as well. Yeah, there it is, our crude oil channel, and as you can see over here, these are the posts suggested in last post. Weakness seems to persist. I will look to add shorts, minor shorts position created, and then market started going down. When was minor short position created? Around somewhere 73.73. I created shorts, booked part profits around 73.358. So this was a scalp trade, I believe. And then the market continued lower. I still had remaining parts, remaining shorts in it, which were booked at lower levels, 72.92. And after that, we have still been adding more shorts, 74.54. target hit, succeeded, again closed, and as you can see, multiple different positions re-entered, updated, added shorts, booked profits. I think 4 or 5 trades within crude oil itself, if not more, have been what do you call done in this, right? So we have captured almost all the parts of this, major parts of this downward movement. And now let's quickly head over and see what's going on really here. So what I'd like to do is quickly have a glance at a high time frame analysis, because the stuff here, second, obviously not a triangle anymore. You know what, we'll look at it once it hits the target. So yes, as I said, the stuff here has been extremely dramatically bearish. So calls for a relook at the high time frame count. I'm on the 4 hour here and consider this as our point of reference. So from this point of reference, what we are really seeing here is a correction in the downward direction. Previously, we had now I don't want to lose the profits I've made, and they are quite substantial at this point. This has been a bigger fall than expected, and I did not want to be in a live stream while being in such a position. Yeah, but can't change the news events, right? So if it goes above over this upside alert, I'll probably look to exit. On downside, we are looking for 1998 or lower levels. Let's quickly put 2 alerts here just to be aware of what's happening, or the speed of the movement of the market from the sound of it. Okay, there goes. And now, as I was saying on the crude oil, the point of reference is here, and previously we had considered that this was a W. I'm not sure how long have you been following me, but we have been considering this downward lag as a complex down since a long time, like since many webinars. Now, previous bias has been that this Z is complete here, or you can even consider, in some cases, even the Y is extended or whatever. But now the idea becomes that maybe this was the X continuing and it has just completed here. So then the idea becomes that the Z is still remaining. And long story short, if Z is still remaining, it will take out the low of 63.784 or whatever it is. Keep in mind, I'm using this data feed. You might use a different data feed and things will vary a little bit. But the idea remains, if the wave X was completed here and not here, keep in mind, previously we assumed this was one of the main counts, right? So if the X is not here, but here, then this basically suggests that we can see market going below 63.78, right? And the second thing that we are assuming here is that, let me see again. If you are not able to understand it, check the recording. We have been talking about these counts since a long time. Second thing that is possible is that Z is actually complete here, but not. I'll just show you by drawing it. So after that, this is an impulse of 1 up, 2 down, and this is a lower degree 1 and then a lower degree 2. Now the problem with this count is it is bullish. It is basically suggesting upward movement, but the invalidation for this count is very near. You know, the invalidation level is this low, around 66.82, right? So if the market hits 66.82, this upside count is invalidated. So what you can do is, in a case like this, if you really want to be sure, then you can just put an alert for less than the invalidation level, and if the market goes below this, then the bullish count goes out of the water and the bearish count is the one which is playing out, or the main thing that is playing out, right? And there is yet another case where you can consider this as the 1, 2, 3, 4, 5, and in which case the market can go to 99.9%, which is around 64.026. But I'm not really going to discuss that count. It's a low probability at this point. There's a comment from Sushil here. Not only crude, but gold analysis is also following yours. Yes, it is, Sushil. And thank you for pointing that out, right? So with that being said, what were we discussing? Yeah, we were discussing that crude oil, we are expecting more downside movement at this point in time. And upside scenarios are active, but they are very weak. I'm not personally in alignment, or I'm not biased towards the upside scenarios until something drastically different happens than what we were thinking, right? Now, with that being said, what I want to discuss is a short-term count. I don't want to discuss a long-term count. It will be a very lengthy conversation. The short-term count is quite well sorted out at this point. I'm not holding any shorts, by the way. Just keep that in mind. And our analysis is coming from this point. So from the short term, we are looking at this thing, right? So what is this thing? One down, a two up. I'll just check the counts myself, right? So one and two and three and four. So what we are basically seeing here is impulse in the downward direction is basically my count, and point of reference is basically the price level of 79.771 in this box region here, right? So from this point, as I said, we are considering this as a 1, the 2, and the 3 is already complete here, and we are expecting this to be the 4, right? Now, a few things are quite clear with these kind of progressions. If you are following me, you already know that we generally look for retracements around 23.6 and 38.2. It has already hit the 23.6 retracement level, as you can see, which is actually coming around at the price level of 71.141, right? Now, it could still be continuing for the 38.2, which is 72.272. We do not have any evidence for a clear move for any of this. So what we are gonna do is we are gonna wait and watch a little bit here. And I should actually push this one a little bit up. Now the expectation here is that the market can reverse either straight down, or this market can go a little bit up to the 38.2 retracement level, which is currently coming at 72.272, right? And if the market does that, then it can reverse around 38.2 level. So if the market does this, that is goes to around 38 retracement, then I will like to be aware of it, right? So what I'll do is I'll just push an alert here, and greater than is basically what I'll do. So if the market goes here, well, good enough for me. I'll wait for a reversal somewhere around here. If I see a clear sign of reversal, then I'll look to add shorts with the stop loss a little bit above that level, right? And obviously these strategies can change over time, right? What I'm discussing here is a representation of what I think at this point in time. Over time, things might change, and I might change my counts, of course, right? Everything is dynamic. Keep that in mind. And yeah, just keep in mind, we also have a private Slack group where I update all these counts and everything. You can request details by using the contact us page, right? Getting back to our discussion, this is one setup. Second setup is it can just straight out fall down, in which case I'll be looking to add shorts, perhaps below 69.661. That is what I can deduce from the looks of it right now, right? Around 38.2 or straight down, then below 69.677, whatever that is. So that's our basically the whole discussion of what you call crude oil, right? Wait and watch. Bias remains bearish. And yeah, last thing, if the market sustains above this the 38.2 retracement level, which is 72.272 price wise on this chart of data feed, then keep in mind then our analysis may be changing and the bias may be shifting, right? So you also now know or have an idea of the invalidation level for this counter. All right. So with that being said, let's now head over to our discussion on gold. And keep in mind, guys, I'm already short on gold. So what I'll do is I'll just quickly update this count for myself so that I have an idea of what to do. And although I have already things planned out, but it's always good to recheck the analysis and look for new possibilities. Well, it might be the end of the whole move. Yes, it might be the end of the whole move. That's definitely possible. Because remember, guys, gold is overall in a bullish cycle, right? Overall bullish cycle. That being said, what I'd like to do is I'll check one more thing: A, B, C, D, E, and 1, 2, 3, 4, 5. I am actually biased a little bit towards closing this position. That's substantial profits. I don't want to go. Yes, so I've closed it. I'll look to re-enter later if there is an opportunity. But from the quick looks of it, which I got, this is the gist of what I got. I got the possibility or the possible idea that maybe we had a very short triangle here. And 1 second, what was that? Yes, if this was the 4, then the 5 could have already completed. This is the idea which I got before closing the shorts. Maybe you even heard the sound of the thing closing it. Right. So I have closed the shorts. I was trying to discuss I got distracted by the comments. I'll look at it later. Right. So if the 4 is complete here, then the fifth could be very easily counted as a 1, 2, 3, 4, and 5. I personally think the 4 may have some sideways movement remaining. But yes, guys, keep in mind this is a counter trend trade. So hence, I'm not required to hold till the absolute targets, and generally is not a very good idea. It's actually a bad idea to hold these things for absolute targets. And we'll discuss all about it now. But let me just check all the comments. ITS Hero, can you look at Imami? Sorry, dude, I don't track these things or trade these things. At someone is typing solo 38 blah blah blah. Do you just look signs? I don't use any indicators. I've said it so many times, and I think this guy, I don't know what his name is, but I think I've seen this same ID multiple times. So don't ask the same thing again and again. Pure price action I use. So what we were looking for is sorry, got distracted there. So yes, generally we like to look at what we discussed in the last webinar. So again, if you are just joining in, all the 6 setups we discussed in the last webinar I have played out. So we'll just look at what I said about gold just for the record keeping purposes, and it actually played out wonderfully well. Let me just go to the recording part. Yes, so as you can see, this is the last webinar's recording on gold. 1 second, I'll just note down one thing. So yeah, this is, as you can see, is the last recording on gold. And in the last recording, what we were discussing was that this market has some upside remaining, right? And just note down the price here. And there's a few things I like to show off. First, keep in mind that we were waiting for a wave 4 completion and then a wave 5 up. And once the wave 5 up completes, we were also looking for a reversal in the downward direction, right? So now it is it is funny that it all played out literally as per discussion. So I'll just want to zoom in a little bit and show you the price. So as you can see, the price in the last webinar discussion was around 2036 and we were expecting reversal. Now I'll just head over to the actual chart of gold and just go back in time to 2036. Right. So this is where we were in the last webinar, 2036. I'll just go a little bit lower. So this is where we were in the last webinar, right? And literally the market shot up from there. Not only did it shoot up, it did reverse after completing the fifth wave from there as well. And yes, obviously, guys, we were able to capture multiple different movements within this upside and downside. Or the upside was captured live in front of you guys. We were also able to capture the downside movement as well. And what is this gold spot? Yes. So as I said, last webinar recording, whatever we discussed played out and we were able to capture all of it. And subsequently, I was able to take a short trade. Let me see when I entered the short trade, by the way. I also have to update about the closing of the short trade. So these are the posts on golds. Let me see. Could I have just checked the trade history? It's funny, I have not. Yeah, there it is. I did shorts. Stop loss 2039. The entry price, I just want to check the entry price is 2028. And I closed it just now around 2006. Well, that's about 22 points, roughly speaking. 22 points captured. Oh, no, not 22 minutes. 22 points captured in a downward direction, right in front of you guys. So yes, this was a trade I just wanted to show you how we posted it and everything. Now coming to the counts on gold, there are two things that are possible here. One thing is I'll just remove all of this. The software has been extremely laggy. So yes, one thing is that we are expecting this leg down to continue here, like this and this and this. So basically, it suggests more downside is remaining, right? And it can also be that this downside which was remaining, this by the way is a flat correction in Elliott Wave technologies. It is possible that the C is complete here as well. That is a possibility. I cannot ignore it. And because the positions were giving good enough profits, I exited them. But if this possibility of C continuation becomes more likely, then as I said, we can always re-enter and we can always ride the wave, right? So why did I say that it's a counter trend? Because just keep in mind a flat like an A down, B up, and C down is a counter trend move. It's a counter trend of what? So if you are familiar, I have been sharing this as our thumbnail image for the last as well as this webinar. So this is a daily chart as you can see on the top, and this is the resistance zone here. Right. So this is a multi-year resistance. As you can see, the market every time it jumps in within this zone. Last time around 7th August, then around 7th August 2020, by the way. Then around March 2022, then around 4th May something 2023, roughly speaking. And then this is December 4th, 2023. So this time it has been able to penetrate all this stuff and go above it. So this is a sign of bullishness. Of course, nothing is confirmed, and it is a possible scenario that this market will just continue as a flat, as I said before, taking off for new lifetime highs, right? So because there is a possibility that this market can just go and go sideways for once, that's why I even considered shorts, because overall it looks bullish. Overall, it has been able to at least break at once the lifetime highs. So this was the zone of resistance around 2079. This market now made a high around 2143 something, roughly speaking, 2144 maybe. So since it has given us signs that it is looking for rally, I'm not going to hold the short positions for very long. That's just a bad idea. That's why I exited right now. Now, with that being said, I pointed out that it is possible that this market continues a downward movement a little bit. We do not want it to go lower than 1850, basically. We do not want to see this low being taken out. Okay. So that will be not a good sign for bulls. That's just something out of the bat I will have to tell you. Right. So what's the strategy here? Strategy, as I said, more downside is possible. We wait for signs of weakness. If there's more downside, we can look for some short-term trades. Otherwise, upside wise, I'll look to or consider longs above, not really 2024, a little bit above 2046 something level. I'll consider or look to consider long trades here. Right now, going back to the short-term time frame will give a proper context of things. Not really this one. This should do. So yes, as I was saying, I will look to consider longs a little bit, let's say above this resistance zone around 2040. What is happening here is we have a lot of consolidation here. So basically a normal resistance level has formed. So somewhere above it, I'll look to consider longs. But as far as the market remains below it and the bearish count remains active, I might even take some shorts here and there. The progression will be quite simple. You can see it here like a 1 down, 2 up, 3 down, 4 up, and then 5 down. So basically, if the market does continue lower, then we have one leg down for 3 and another leg down for 5. So basically, long story short, we can have these two legs remaining. I'll just quickly draw them roughly by correcting the whole thing. So we can expect something like this. So these two down legs is what you'll look for. Wave 3 down and wave 5 down. And as I said, if the thing is complete here, then it can just reverse from here. So wait and watch. Both ideas have been discussed long. Just to conclude the discussion, above this level, I will look for longs, not take longs, look for longs. That is real the markets. Shorts, we don't have a clear confirmation now. I'll just wait and watch for it. Too much time I took on gold. But anyways, let's now head over to our next chart, which will be chart of S&P 500. Again, guys, the setup we discussed on this thing also played out picture perfectly. And let's quickly see what the setup was before moving to the actual chart of gold. Sorry, S&P. And here is a recording from the last webinar, which was conducted on 1st of December. We were expecting sideways movement on this counter. Let me just quickly go and show you. So this is the last discussion. As you can see here with the arrows, I was expecting sideways and then up move, or a little bit bearish move and then up move. So basically, up move was the conclusion of both our analysis, but not immediate up move. A little bit of wait and watch and then up move. So this was, as you can see, was posted in our analysis on S&P. Again, if you are watching this and you want to verify these things for yourselves or check the detailed discussions, you can just go to 50 Years Market Analysis YouTube channel and click the live button and check 91st Trading Opportunities webinar here. Right. So again, now heading back to our actual discussion, what you can see over here is, I'll just remove all this drama and just show you what things are. So this was a point where we analyzed the three. I'll just type it as simple numbers. The third wave complete here. And after that, I suggested sideways movement and then up. So what has been happening is the market has been remaining in the sideways box, as you can see over here, since our discussion. Right. And now what this points out is basically the fact that we are in a flat type of correction. So if this is an A wave, this is a B wave, we will expect to see and then longs. And I personally think I should probably get some long entries in on this market. But yes, I can just wait for my actual alert level to be triggered. So the trading strategy I personally will be employing here is I look to build some longs, small positions first, and then more later on. The idea I'm thinking is that this market can just shoot off from here, by the way. And the second idea is that it can just go a little bit above the last high, above this high of whatever this is, 4600 something, then give a small retracement, a test around 4600, a little bit below it maybe, and then actually take off, right? So keeping this in mind, I'll build some longs above this last high, or recent high, sorry, around whatever this is, 4593 on this data feed, right? And then basis on that, I'll just build accordingly according to my position sizing and whatnot. So that's our strategy, straightforward and simple, quite simple. And if I do take long entries on this counter as per plan, then I do not want to hold them if the market goes below 45.50 straight off. Of course, you can also move your stops above like 4560 maybe, but this is the more preferred level for me as of now. Again, keep in mind I don't have any position on this counter right now. So that's about it for our quick analysis on S&P. Right, nothing much to add here. And with that being said, let's now head over to our last two discussions. Nifty 50 will be followed by Bitcoin. And do keep in mind, guys, that this takes a lot of analysis and a lot of hard work to bring up these webinars. And I've been producing a lot of what you call work, which generally remains behind paid walls. And we will really, really appreciate if you can share this content by at least by the time it's complete, and with at least 5 of your colleagues or circles or groups or whatever you're following. Anything, Discord trading groups, Slack trading groups, WhatsApp, Telegram, or whatever you guys use. I would really appreciate some sharing from your end. Or if you are on some trading forums where you think people will find this of use or benefit, then please do share it there. Right. And lastly, as you guys already know, you can see it scrolling on the bottom of the screens here. You can, if you want to have access to our private Slack group on request only basis. We don't take just about anybody. These things have to be requested, and then only then you will get the whole details of everything. Yes. So with that being said, let's now head over to our second last chart of Nifty 50 very quickly. And as we do with our analysis, we'll just check what we discussed on Nifty 50 in the last webinar, and then we'll head over with the current webinar. So I remember in the last webinar, I was suggesting that if the market does not breaks the yellow line, then we can expect a correction. Now, funny thing, it never really even touched that yellow line. Let me just quickly show you what I'm saying. Somewhere here, maybe. This is a count of Nifty. Yes, sir. So let me see if I can play it and show you. So this is the recording from the last webinar, and there was a yellow. This is the yellow trend line, but let me see if I display it in the webinar as well, just for record purpose. I do know it because I have checked all of these recordings, what I was saying and what happened. But it looks like it will take a little bit of time. So, anyways, I'll just conclude it for you guys. In the last webinar, our discussion was that the market, if it goes below this yellow trend line, then I'm expecting a correction here, right? If it sustains above this yellow trend line, as long as it sustains above the yellow trend line, we do not sell short. Now, funny thing is, it never even broke the yellow trend line. And for records, I'll just show you the price is 20255. And now we'll just head over to the actual chart and 1st December, we'll check the price very quickly. Yeah, there it is. Market closed at 20255. And as you can see, it never even touched the trend line. This is not the same trend line which was shown in the last recording, but as you can see, it gapped up and has sustained above it. So basically, it's in a super bull trend. Needless to say, it achieved all my upside targets. We were able to follow a lot of them during the actual webinar itself, and during the actual week itself. Sorry, actual webinar. Like I'm giving a webinar for the whole week. So, anyways, what I'm saying is that now we are in a super bull trend. There is not much point discussing targets because in a super bull trend, the market can just hit upside targets like real fast, faster than your expectations. So again, still, I'll just show you what I have on screen. Our immediate targets are coming around 21,000. What is this? 21. It's actually around 22,000, and then followed by 23,200, followed by 23,944, something. So these are the immediate targets which are upcoming. I don't have any time estimates or clear idea of how much longer will be the correction. Keep in mind that's the nature of bull moves. And generally, the way you want to trade them is not by actually directly trading them, but by trading them alongside also focusing on the stock market, finding out which sectors and then which stocks are playing in, and then making some trades there as well. But that's a very detailed conversation, not for something like a private webinar. Just giving you a hint of how to deal with these things, right? So stuff like that is better reserved for my personal classes. So what we are seeing here is, I'll just get to the point here, is wave 4 is what we are observing here. 3 up and 4 down and 5 up is what we are expecting. And the way this wave 4 has formed, this is in itself giving me evidence that this is extremely bullish, right? My personal expectancy is that it might open gap up on Monday based on just the way it has closed, right? Try to go below the trend line. Actually, let me check. Oh, the trend line itself needs to be corrected. It won't let me do it properly here. There it is. So it has not even given a proper retracement. That is uh, in itself is a clear indication that extreme upside is about to come. Like remember the last time also I was saying that it is very near to the trend line. If it breaks below, it will look for shorts, and it just gapped up. So it has this tendency in an extreme bull trend. The market will have a tendency to never give a proper retracement, hence never allowing weekends to jump in. And at the same time, when you think you can wait for a retracement and then jump in, the market will give a gap up, and hence not allowing you an opportunity to jump in at all. That's just very common. The participants do not like to keep weak hands in, so they don't give them the opportunity. Basically, if you think about it, weak hands will think in weak terms. They will think that we'll look for pullbacks. That generally works in sideways markets and general market conditions. But in a bull trend, you need a mindset which is strong and plays the trend in accordance with it. So basically, you will not get a proper entry in general, right? And once you start getting proper entries, maybe the trend is stopping or reversing. Long story short, I'm expecting more upside on this counter, right? And this immediate target is coming around 21025. That's very small. Let me see if I've worked out anything else on this counter. So in cases like these, we do expect that the upper trend line will get hit, which is in itself giving us a target of 21,327. Now, keep in mind, this is just a guideline. This is not the what do you call hard and fast rule that this upside trend line should get hit. But in a strong uptrend like this, we generally do expect something like this will happen, right? So with that being said, just keep that in mind. Observe the trend line, and of course, if the market does not open gap up on Monday, then itself it's a sign that maybe the bulls are stopping a little bit, because as I said, given the momentum on this counter, and gap up will be very, very not out of the ordinary or very commonplace. Nothing to add here. As I said, I'm not really a fan of giving targets. In a super bull trend, there's not much point I can say anything, and anything will actually get hit. If you do watch the last 2-3 webinars, we had not 2-3, last 10-15 webinars, I had given some upside targets when we were discussing some long-term counts when this bull wave had not started. All of them have been hit and all of them have been surpassed. So as I said, I can just say anything and anything will happen if it's a strong uptrend. And as I said, the better analysis is to discuss the underlyings and finding better plays on the constituents of the index. But I'll not get into detail on this. And we'll close our analysis on S&P with, sorry, Nifty with just that, and head over to our discussion on BTC, Bitcoin. Again, something which we discussed in the last webinar and played out precisely as expected. So what was the last analysis? We'll just, as always, head over to our YouTube's live broadcast done on 1st December, which was a 91st webinar or 91st trading opportunities webinar. And last discussion is of BTC. Let's see somewhere here. Yes. So basically the analysis was that this line, violet line, as you can see, which was at 39,184. Let me see if I've written it as well. Let me just play the recording here. Just for record purposes, I just want to show you what we were discussing and move it to 2x speed. So basically the analysis was that above the violet line, which is, oh, there it is, 39,184. Above the violet line, we will look for longs until the market sustains below the violet line. It can continue for a correction within wave 4. So basically, long story short, below the violet line, the market can just remain in a boxed sideways movement. Once it goes above 39,184, we expect bullish movement to pick up or market to head up upside, right? Now, if we come back here, and this is the same line, 39,184. As you can see over here, the violet line, the market did go break above it with a substantial strength. And since then, the market has gone up, down, and it has literally followed the whole count and is still giving a new long count above 44,090 something. I'll consider long trades here. I'm not really trading it right now, but because there are one or two more possibilities incoming here, like the one which we'll discuss here at the WXY. But what I like to do is quickly show you guys about the post we have made on this thing. Here's the Bitcoin channel, and let me see around 1st December. After that, what posts we have made. So this is the post on 1st December. We are expecting sideways movement. Once the market breaks, then we have projected the upside targets for this counter. Right here it is, as you can see, upside target. It was already hit 2079, sorry, 3079 points was the upside target, and what was it really? Yes, that was the number of points. And then we expected some more sideways movement here. Then the market did give us a sideways movement, which was around 41,281. And follow through, we did see more sideways movement, and eventually this market has broken above that level as well. The sideways movement got completed around 41,200, whatever that level was, and broke above it. So we have been following this with extreme detail, and right now also we are following it, obviously, and tracking it as it goes along in our private Slack group. Right. So now let's get back to the situation at hand. What I'm expecting is that this market is currently in a W down, X up, and Y down, maybe, or it is just the whole correction complete here. So if I were to elaborate on it, we are expecting that either the wave 4 double bracket is complete here, in which case this market can just go up from here. Second possibility is that it has still got one leg remaining, and in which case this market can go down first and then up. So that's why I'm not currently long on this counter. But overall, the expectancy is that this market has one leg up remaining for the completion of double bracket 3. Then there will be a minor correction, and then it will have another leg up incoming for the double bracket 5. So basically, if this count plays out, if this count is perfect or correct, I should say, then we expect the market to give us one leg here and then another leg here. Basically, two legs in the upward direction is what we expect if this market is holding up or working out as per our analysis. So that was about that for our whole discussion. Bitcoin, crude oil, gold, S&P's 500, Euro, USD, Nifty 50. We discussed all the charts we come here to discuss. And with that being said, I would like to say that we have completed the webinar. Thank you guys for staying till the end. And if you liked and enjoyed the content, do not forget to hit the like button. And of course, we need a lot more views and subscribers, likes, etc., etc., to continue this in doing this more of these quality webinars. So make sure to do your part and share the content once this webinar is complete, which is right now. Thank you for staying till the end. And here's a message. Thank you once again for amazing webinar. This is a message from Sushil and giving time by sharing such a treasure. You're very welcome, Sushil, and thank you for your nice comment and staying till the end. Okay, there is a comment I missed. Super bull trend suggestive. This is just wave one or R wave three of higher degree. So yes, it is a question on W. What do you call Nifty 50? I believe. Super bull trend is a term I used there. I believe. Yes. So this is actually expected to be a wave three of the high degree. I'll just quickly give you a rough idea, right, without getting into too much detail. As you know, I do not want to give everything away, and it's not possible here. So expect this to be a wave one. Again, keep in mind, Sushil, there are multiple different possibilities here. I'm just considering a few of them. So this is one of the major counts. Keep in mind, this is not the only count I have, but one of the major counts is suggesting that this is a wave one up and this is a correction down. So you get the idea, right? And further updates. I mean, you already know where I post further updates, right? So I believe that also answers your question. Let me see if there was something else which I missed. That's about that for these webinars. Thank you guys for staying till the end, and I hope you share and do your part. See you in the next one. Take care.